I'm Matt Glenn.
I'm Matt Mounier.
You're watching 203K TV, where we're talking everything 203K in Fannie Mae HomeStyle. Today we're talking about qualifying for one of these mortgages.
We want to answer that question that you guys have been dying to hear. How do I get qualified for one of these awesome mortgages?
Yep.
We're going to start with 203K.
Okay.
So 203K is an FHA loan, so it is going to have to be owner occupied.
Yep.
You still get your FHA rules that you can put 3.5% down on your primary residence, and that 3.5% down carries over if you are looking at 1 unit, 2 unit, 3 unit, or up to 4 units to qualify.
So out here in San Diego, where our property prices are a little bit high, that limit actually extends to where you could buy a 4-unit property for $1 million and put 3.5% down. That's $35,000 down. So you're really leveraging yourself. But the really cool thing about these FHA loans is you can use rental income to qualify from the other 3 units. Obviously, remember, you're occupying one. It's an FHA loan.
And it's that after renovation rental schedule that you're getting. It's not just, hey, this is what it could probably go for right now. It's once you finish the units how you want them done, and what's the rent right now on a finished unit in the market. And that's what you're using to supplement that $1 million loan that you're opening up.
Yep. Okay, so let's talk FHA. We already said 3.5% down. What are the other qualifying standards?
Right. So the magic number is it's the conforming limit. So that's $453,100.
Okay.
If your FHA loan, 203K loan is going to be under that amount, you're going to need a 620 credit score.
Okay.
Any loan above that amount, you're going to need at least a 640 credit score in order to use this loan.
Okay. So over 453,100 in certain parts of the country is an agency high balance loan. Right. So that's where you need that slight bump in credit score up to 640.
Yep.
Okay. All right. So that covers FHA. Did we miss anything there?
I think we did good. Let's jump into HomeStyle a little bit. It's also, you can buy a primary residence. You have to put at least 5% down on that home. Yep. But you also have access to buying a second home or buying an investment property and use this HomeStyle renovation
And what's
loan.
the down payment required on second home and investment properties, Fannie Mae HomeStyle?
So the minimum is going to be 10% down for a second home, and the minimum for investment is going to be 15% down.
Okay. Now, both of those are going to have mortgage insurance unless you're putting 20% down. Typically on those second home and investment properties, we do see people putting 20% down just to avoid that. And then let's kind of compare and contrast the FHA versus the HomeStyle and the mortgage insurance that's associated with them. I think that's one of the really big differences between the two. If you're talking a Fannie Mae loan, you're going to have mortgage insurance from private companies that can eventually go away. When you're dealing with an FHA loan, you're going to have a set mortgage insurance number. But unless you're putting a lot down at the beginning, it's really not going to go away ever. So consult with us, give us a call, and we'll lay your options out in front of you as to whether you should be thinking 203K or Fannie Mae HomeStyle, and we'll factor in this mortgage insurance and potential refinances, and we'll run through all the scenarios for you.
Right. And when you're thinking about these down payments that you're looking at, what does this 5% mean? So when we're looking at down payments, we're looking at the purchase price of the home, and we're looking at the renovations involved. So if you're buying a home for $400,000 and you want to put $100,000 of renovations into it, we're looking at that $500,000 number. So you're going to need to put 5% down to qualify on a primary residence minimum. But if you want to get rid of that mortgage insurance, that's $100,000 down to get to that $400,000 loan amount.
Let's talk about that really quick. Let's go into kind of the down payments that are required. So for example, let's use your example right there. So you said $400,000 purchase, $100,000 renovation, that's $500,000. If we're putting 5% down on that, we're putting $25,000 down. That's just your down payment. Remember, there are closing costs here too, and the closing costs with these HomeStyle loans are typically a little bit more expensive. Most of the time, they're 2 to 3% on a normal loan, but we tell everyone to expect that 3 to 4% on these type of loans. But when you look at the access to $100,000 that you're getting to renovate the home at the time, I mean, it seems like a steal.
It does.
So I think we've really covered the FHA 203K and the Fannie Mae HomeStyle qualifications.
If you guys want to get qualified, please give us a call. We'll help you through it. We'll walk you through all these steps, what you qualify for and what your best options are for you.
Thanks for watching.